This next slide, we're going to discuss the petty cash system. Petty cash is a small amount of cash on hand used for relatively small payments. This way, a manager can use cash to purchase small items for the business without having access to the entire bank account. For example, at the accounting firm I work at, we have a locked box with petty cash in it. It has small amounts of money and quarters in it. We use it to give to our clients who come in who need money for parking. Also, if one of the employees wants to run across the street and grab something to drink or to eat, our boss provides us with a small amount of cash to do that. I have a few short clips from shows Parks and Recreation and The Office about petty cash.
I need petty cash. My iPhone cover's gross and I need to get a new one.
Yeah, get it to match your personality. Petty cash, Moneyball, go diving.
Gross.
Why we keep our petty cash in a clear plastic toilet bowl?
I don't know, maybe because we're flush with cash.
I need you to do something for me. Anything. Okay, calm down. I need you to acquire an inflatable house and or castle.
You mean a moon bounce?
What do you think? You've got an hour.
I mean, I need petty cash.
Running resumed.
Do you want a drawbridge?
Unshun. Yeah, that sounds good. Reshun.
Oh yeah, this is much better.
Those are obviously jokes, but it shows that petty cash is common in businesses. We're now going to be going over the journal entries regarding petty cash. First, we'd like to establish a petty cash fund. This is moving money from the bank account to a petty cash box in the office. The journal entry would be a debit to petty cash and a credit to cash. Petty cash is an asset. It's a current asset. The petty cash account is going up. To indicate that an asset is going up, it would be a debit. Therefore, money is now put into this petty cash fund. Cash is getting a credit because that account is going down. Basically, just moving money out of the cash account into the petty cash account. You only need to do this journal entry once when you're establishing the fund. However, if you want to increase or decrease the fund, then you would be making an additional journal entry to the petty cash account. To increase the fund, you would do the same entry. You would just move more money from the cash account into the petty cash account. If you want to decrease the fund, you would do the opposite. You would make the petty cash account go down and put that money back into the cash account. You would increase or decrease the petty cash fund based on your usage. If you feel that you're constantly replenishing it and there's not enough money in there, then you might want to increase the fund. If you feel that there's too much cash on hand and you want to reduce how much is in the office, then you would reduce the account. The entry that is more difficult is reimbursing the fund. To give you an idea on how this works, employees will use the fund throughout the time period. No journal entries are made. They will take cash from the petty cash box, use that to buy something, and then put the receipt back in the box. No journal entry is done. However, when the fund is getting low, or maybe it's at the end of the time period, such as every month, we do need to reimburse the fund and record all the payments that were made. To do this, you will debit each of the expenses using the receipts in the box and credit cash. However, if the petty cashier fails to obtain a receipt or accidentally pays too much or too little for something, then the box will be off. The receipts won't match the amount of cash that was spent. If there is a difference, you will either debit or credit an account called cash over and short. If it's short money, you will debit that account. If it's over, you will credit that account. This is what the journal entry would look like. At the top, we have the expenses. You would just list all of them pertaining to the different receipts that are collected. You will credit cash for the amount that the fund needs to be reimbursed for in order to be at the established amount. I do the journal entry for this in 3 steps. First, I list all the expenses from the receipts. Second, I credit cash the amount in order to make the petty cash account whole again to the established level. For example, if we normally have it at $100 and there's only 20 left, I know I'll need $80 to bring it back to 100. My last step is to add up my debits and credits and see if they match. If they do, you're done. If not, it's because there's an overage or a shortage of cash. I would either debit the cash over and short account if there's a shortage, or I would credit that account if there's an overage. I just try and make sure my debits and credits equal in the end.